So here, role of financial system in the economy, that is national income accounts and flow of funds account. First, saving investment relationship. To attain the economic development, a country needs more investment and production. This can happen only when there is a facilities for savings. As such, savings are channelized to productivity resources in the form of investment. Here, the role of financial institution is important since they include public to save by offering attractive interest rate. These savings are channelized by lending to various business concerns which are involved in production and distribution. Saving and investment. Saving there which when we go and save our money in a bank, then the bank provides loan on that money only. They induce public to save by offering attractive interest. They provide interest, and these savings are channelized by lending to various business concerns which are involved in production and distributions. They we when we save, and the banks help in lending to various business and production and distribution. Here, this is the main role of financial system or that mostly in the banking institutions. Then financial systems help in growth of capital market. Every business requires two types of capital, namely they are fixed capital and working capitals. Which is fixed, that is for long term, and the working capital, it is for short term. Fixed capital is used for investment in fixed assets like plant machinery, while working capital is used for day-to-day running of business. Fixed, that is, we purchase assets, fixed assets, land, building, machineries, and working capital day to day, how we run today's expenses, stationery, then day to day expenses, they are rent. It also used to purchase raw materials and converting them into finished products. Fixed capital is raised through capital market by issue of debentures and shares. Public and other financial institutions invest in them in order to get good return and minimize risks. Risk is minimum and good return and minimum risk. Working capital is getting through money market, short term. Fixed capital, that is capital market, is long term, and money market, it is short term. Loans could be raised by business through issue of various credit instruments such as bills, promissory notes, etc. Then foreign exchange market. It enables the exporters and importers to receive and raise the fund for settling transactions. It also enables the bank to borrow and lend to different types of customers in various foreign currencies. The market also provides opportunities for banks to invest their short-term idle funds to earn profits. Here, the market also provides opportunity for banks to invest in short term to earn profit. Foreign exchange markets, even the governments are benefited as they can meet the foreign exchange requirements through this market, foreign exchange markets. Then government securities market. Financial system enables the central and state and central government to raise both short-term and long-term funds through the issue of bills and bonds, which carries attractive rate of interest along with rate tax concessions. Thus, capital market, money market, along with the foreign exchange markets and government securities market, enables the business, industrialists, as well as government to meet their credit requirement. In this way, the development of economy is ensured by the financial system, that is government security. It can be both for short term and long term, that is given by the state and central government. They issue bills, the bills are issued, bonds, and even there is concession, the rate of it, the effective rate of interest is there, and even there is tax concession such that the entrepreneur purchase or the people purchase more securities, government securities. There is a tax concession also here. Tax concession and interest rate. Attractive interest rate. Interest rate. Attractive interest rate. Infrastructure and growth economic development. Infrastructure and growth economic development of any countries depends upon the infrastructure facilities available in the country. In the absence of key industries like coal, power and oil, development of other industries will be hampered. It is here that the financial service play a crucial role by providing funds for growth of infrastructures and development. See that the financial system provides finance for infrastructure and economic growth and development. Private sectors will find it difficult to raise huge capital needed for setting the infrastructure industries. Government sector they carry on with the funds provided by the public sector, but private sector it is very difficult for a long run. In the infrastructure industries were started only by the government in India by the government in India. But now, with the policies of economic liberalization policy 1991, global LPG, globalization, liberalization, privatization. Liberalization means reducing reducing the different types of policies, restrictions from the private sector. In 1991, the LPG in the when Manmohan Singh was finance minister and um, Narsimha Rao was prime minister, then they had launched this policy, national policy 1991, economic policy, liberalization. More private sectors industries have come forward to start infrastructure industries. The development banks and merchandise bank help in raising capital in these industries. It was the policy which changes major 60% of gross capital gross capital domestic GDP was increased during with that policy, LPG policy. Then developments of trade. Development of trade, the financial system helps in the promotion of both domestic and foreign trade. The financial system, financial institution, finance traders and financial market help in discounting the financial instruments such as bills. Discounting policy, what we learned before, discounting, reducing the rate of the bill, that is discounting. Foreign trade is promoted due to per shipment and pre-shipment and post. Not per, it is the pre-shipment and post-shipment. Finance by commercial bank. These also issue letter of credit in the favor of importers. Thus, the precious foreign exchange is earned by the country because of presence of financial system. No doubt development of trade and even what we studied in the foreign market, same it is here. Employment growth is boosted by financial system. The presence of financial system will generate more employment opportunities in the country. The money market, which is the part of financial system, provide working capital to business and manufacturers. Due to this, production production increases, result in the generating more employment opportunity. Employment growth by is here. It is also a role played by financial system. Then venture capital. Here the various reasons for lack of growth of venture capital companies in India. The economic development. There are various reasons for lack of growth of venture capital. It is more risky fund capital. The economic development of a country will be rapid when more venture capitals are promoted, which require modern technology and venture capital. Venture capital cannot be provided by individual companies as it involves more risk. It is highly risk. Venture capitals are more risky than any other capital. Financial system ensure balanced growth. Financial system ensure balanced growth. Economic development required a balanced growth, which means growth in all the sectors simultaneously. Primary sectors, secondary sectors, and tertiary sectors required adequate funds for their growth. Balanced growth. Then financial disciplines and control of economy. Financial disciplines and control of economy. It is through the financial system that government can create an congenial business atmosphere so that there is neither too much inflation nor depressions in the experience. The financial system should be a control of economy. There should not be inflation, rise in the value of price increases, and depression when the value of price decreases. The industry should be given a suitable protection through the financial system so that their credit requirement will be met even during the difficult period.
So, we will start our first unit of introduction in our next video. With this, thank you. God bless you.